Today, we're diving into a monumental decision from the US Supreme Court that has rolled back a significant portion of former President Trump's tariff program. US stocks have already reacted, and investors in both the US and India are watching upcoming trading sessions. So, what exactly did the US Supreme Court decide? In a 6-3 decision, the court ruled that the International Emergency Economic Powers Act, IEEPA, the key emergency law Trump relied on, does not grant presidents authority to impose broad tariffs. This decision limits the executive branch's power to implement tariffs quickly and at scale, leading to an effective tariff cut on many imports. However, this ruling does not end all tariffs. Sector-specific duties, such as those on steel, aluminum, and automotive parts, imposed under other statutes, remain in place. In response, former President Trump has announced his intention to impose a new 10% global tariff, later raised to 15%, using alternative legal tools like Section 122 of the Trade Act of 1974, which allows temporary import restrictions to address balance of payments deficits. The immediate U.S. market impact saw stocks rally modestly, with the Morningstar U.S. Market Index up around 0.33% in mid-morning trading. Major U.S. indices like the S&P 500, Dow, and NASDAQ closed higher. This ruling is seen as a modest reduction in U.S. trade policy uncertainty, limiting the president's ability to impose abrupt tariff shocks. Key beneficiaries are expected to include import-heavy manufacturers, retail, and consumer companies, as removal of these tariffs could provide margin relief and improve profits. The decision could also ease inflationary pressures, influencing Federal Reserve expectations. Historically, markets have reacted quickly to tariff news under Trump. During his first term, tariff hikes often caused risk-off moves, while pauses or rollbacks triggered relief rallies. Sharp sell-offs followed tariff announcements, but the S&P 500 still saw sizable gains in 3 to 4 years. This shows that while initial reactions can be volatile, reassessment often occurs once policy details and long-term implications become clearer. The impact on India is significant. U.S. tariffs have previously affected Indian exporters and sentiment, particularly in textiles and gems. The Supreme Court's decision is expected to bring some relief to Indian exporters with U.S. exposure, triggering positive sentiment. Indian sectors that could benefit include IT, pharma, textiles, and manufacturing exporters. However, the proposed 15% global tariff could still create uncertainty, so Indian markets will track the details closely. Investors should watch sector rotation in U.S. markets, moves in the dollar and treasury yields, India's official response, and foreign investor flows into Indian equities.